Today is Monday, March the 23rd, and this should be a fairly short video because really what we saw in the FinViz was indicative of what was happening on the Senate floor. So let's take a look at FinViz, and you'll see that the market was up because Chuck Schumer said they were near a deal, went down when the deal failed, went up when there was rumors that they were going to go into another deal, went down when the deal failed. So this is indicating that the market is really ready to make a move once $2 trillion is injected into the economy. But this is going to get sucked up very quickly, and the businesses are still not going to be open. They're still not going to be employing people, but people will have money to spend, but they may not go out of their house to spend it. Now today, apparently in the evening, Trump said that in 2 weeks he was going to take the movement limits off. That could tank the market tomorrow because the market is smart enough to realize that if he allows freedom of movement and he takes all the restrictions off, people aren't stupid. 60% of the population aren't stupid. They're not going to go out and risk anything. They're not going to go back to work. So we can look at our breadth analysis. The breadth only dropped a little bit. The Dow continues almost a vertical, 90-degree drop down. I don't think, well, have we ever seen a drop like that before? We can go back to our weekly. We certainly don't see even this one back in 2008. You could say was about a 30-degree angle. This one is literally off a cliff. Probably 85 degrees, 80 degrees. So it's really unprecedented. The VIX on a weekly basis, let's go on a daily basis. Let's just see what happened today. The VIX actually has dropped a little bit, surprisingly enough. And these stochastics indicate that it's on its way down, but I wouldn't be so sure about that. So the S&P, let's look at it on a weekly basis, and we have lost the 38.2%, meaning that this area of support right in here is pretty much a magnet for tomorrow's movement. 2131 should be an area tomorrow that we come down and test unless the Senate makes a move. That could result in a bounce up, but I still think before the end of the week we come down to 2138. So I'm going to put that marker in the sand and say right there, that's where I think we're going to be coming before the week is over. Apple was only down overall 95 cents, finished up at the top range of its candle today. This is the weekly candle, but since it's only Monday, finished at the top range. We lost the 50%, but we did bounce today off the 61.8% and this second green line indicator. So we said that our next area of support was going to be this green line, which coincidentally is also the 61.8%. So it was pretty much a given that both of those would be a magnet for attraction down there, and that's what happened. So we got the bounce. Where is the next area of support for Apple? If we just look simply at the candles and look where we saw resistance, resistance, nothing here, resistance, 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 support. This is an important area, 192.48, which would get us close to a 78.6% pullback. Pretty serious pullback, and there should be someone looking to make some purchase there. This is a weekly chart. Let's look at the daily, and you can see that the volume tapered off versus Friday, but is the same as it was on Thursday. Amazon was up 4%, one of the few businesses able to hire people, and they are. Let's see, Dollar Tree is hiring 50,000 people. Amazon is hiring. Walmart is hiring. So what does that tell you? People will shop, but they're looking for home delivery or something really cheap that makes it worth going out of the house. Caterpillar on a daily basis bounced. Let's look at the weekly chart. We're still maintaining this area of support. Now we have a potential drop to this green line, which would coincidentally be right along this trend line. So it's quite possible that this week or next week we come down and do one of two things. One, hit the trend line, and the other hit this $80 support area that I've drawn here. Entirely possible. Coca-Cola, which we haven't been following too much, but is heading down to 34.52, 61.8%. But look where we got support today. We got support on this green line. So we're not looking at Ichimoku anymore. We're not looking at 50 and 200 moving averages. We're really looking at chart areas of support. And that's the green lines that we're drawing on the chart. So go ahead, and all the stocks that you're wanting to look at, go and look for those areas of support in the past 5-8 years, because we're really repeating what happened in 2008, 12 years ago. So go back and look 10, 15 years ago and look for all the areas of support and resistance on a weekly basis. Draw a line there, and they are going to be more important than moving averages or the cloud. AT&T got hammered today, and that's because they're trying to raise funds. Their entertainment business is hurting, and they're not as well positioned as Verizon, which is really a pure mobile play. So there's probably, although I haven't heard it stated, excuse me, there's probably some doubt that they're going to be able to pay their dividend. And they should be announcing a dividend shortly. So pins and needles there. Home Depot had an amazing day today. So what I'm doing is I'm accumulating Home Depot 50 to 100 shares at a time. I've now got 300, and I've sold the April 165 calls against all of them. So today I was able to buy Home Depot for the equivalent of $150 after the premium, and the redemption value will be $165. So that'll be $1,500 profit in the next 30 days. If it can stay below $165, which is entirely possible, then I'll get the premium and roll it for another month and just keep collecting premium and keep loading up on what looks like a stock that could be good when people do go out shopping and recover again. Whirlpool continues to break all of the sound barriers here. It broke this one, this week it's broken this one, and it's certainly on its way down to where it was in July 15th of 2012. Anything else worth looking at? Cisco is going to be one that's going to be worth buying at some point. It's down to 38.2% of this big move right here. And the reason I didn't take this point here as being the top of my Fibonacci and I took here, I really should have taken this, except this one fits so nicely. And in drawing Fibonacci's, it's just as important to take a fit than it is to take the extremes of the candles. Because if I'd taken that, you see that it doesn't fit as well. Traders will look for something that fits, and because there were so many weeks where this was an area of resistance, and then many more after that, either this or this, it really wouldn't matter, but both of these, so let's take the median, let's take the one in the middle, both of these would be used by technical chart traders as drawing their fib lines on, because they want to look for something that has fit historically. And if you look at here, 14.6, 14.6, 38.2, all of these just below 14.6, but not a bad fit. That's all I want to cover today. Gold, in terms of the gold miners, people thought, well, maybe I should be buying gold because it's good to have in times of uncertainty. Well, the dollar is what people are buying right now. So what they're doing is they bought gold for periods of uncertainty, but now they're selling gold. And what are they buying with it? They're buying some stocks that are a good value, and they're also buying the dollar. They're certainly not buying oil. Where are we going tomorrow? It's going to depend on the Senate. And if they can't come to a deal, and whatever deal they come up with goes back to Pelosi's House for approval, and you know she's going to play a hard line. Now, is she getting, and are the Democrats getting hammered on Fox News and other places for not striking a deal? Yes, they are. But they're making a point that they want more in terms of benefits for the workers and less in terms of bailouts for the corporations. And they think they can get away with it. And so do I, at least until the end of the week.